question, which is the 8-mark question. So, with reference to extract A and figure 1, examine the likely impact of a change in the sterling exchange rate on the UK economy. So this looks like a really good 8-mark question, and it should be fairly. So of course we've already had a look through extract A. It talks about forward markets, but now let's have a look at figure 1. First things first that jumps out on figure 1 is a massive, it looks like depreciation of the UK exchange rate. And why is that happening? Of course, when the UK, basically when Brexit occurred, and it led to massive fluctuation in the UK's exchange rate. So I think this is actually a very simple question. Main takeaway from the figure, be very transactional with it. Of course, we're going to use it for application, but let's just not spend minutes. That's what students end up doing, especially when you get graphs. Don't just spend minutes on end staring at it. Get the main takeaways from it. What's the main takeaway? That there's a depreciation in the UK's exchange rate. So let's go back to the question. What is the impact? And remember, it's a very general question here, so we need to use our knowledge, use our exam technique to know how to navigate this. So the likely impact of the change in the exchange rate on the UK economy. Now, so we're saying there's a depreciation in the exchange rate. What is the main mnemonic we learn with appreciating exchange rate? So when the pound is getting stronger, I'm sure a few of you have learned this, which is spicy, very good mnemonic, which is stronger pound, imports are cheaper, thus exports are more expensive. But now, in this example, we're talking about exchange rate depreciating, therefore it would be weaker pound, imports expensive, exports cheaper. So imports expensive, exports cheaper. Let's think about what this means, and we can link this to several different things. And this is why this question, there's lots of different answers for this. You can probably do one paragraph and just the impact of imports being more expensive, and then one paragraph on the exports being cheaper. But if you want to put it together, what does that affect mostly? What macro objective does that affect? Of course, I would say that affects the current account. Why does that affect the current account? If imports are more expensive, what does it mean for import expenditure? It means UK consumers are going to import less. Since simply the higher price of imports, it rations demand for imports, therefore we're going to import less. And if exports are cheaper now, how is that going to affect the competitiveness of exports? It means our exports are now going to be relatively cheaper than our competitors, thus means there's going to be more demand for those exports, meaning that our exports will sell more, therefore export revenue will increase. Thus, now what is the overall impact? Our import expenditure is decreasing, our export revenue is increasing, therefore that is the perfect formula for reducing our current account deficit or moving towards a balanced current account. So my first paragraph, of course, would be just commenting on them two and just saying it improves the UK current account deficit. Now, this question you can go about in several different ways. A really good way to go about it also is embedded in real-world application. We would say that the UK economy is a net importer of raw materials. So we don't make most of the raw materials ourselves, we import those raw materials. Therefore, now let's assess the impact on UK firms. If the UK imports most of its raw materials, and now with the depreciated exchange rate, imports are more expensive, how is that going to affect the UK economy? And of course, you can talk about an SRAS diagram. If the cost of raw materials is more expensive, it will therefore cause SRS to shift upwards to SRAS1, and then price level to increase from P1, PL1 to PL2. What do we call that now? Of course, that is cost push inflation, but more importantly, and the more accurate term for that, would be imported inflation. The reason why this inflation is occurring is due to the cost of importing goods has increased, and therefore that is now being translated into our economy. A classic example of this is the Russia-Ukraine war, where the price of gas, things like oil, increased, and therefore we saw inflation within the UK economy since we import these goods. So that's definitely another paragraph you can go into, but for my second paragraph, remember, it is 8-mark questions, so very brief paragraphs. You do not need much detail, very simple chain analysis. Just make sure you're hitting the marking points. But with regards to my second paragraph, exchange rates, it always reminds me of FDI, since it's very big, especially if you revise the development topics, Unit 4, very well, you will know that FDI is a massive bit of Unit 4. So a depreciated exchange rate can have two contrasting effects on FDI, but the main one I'm going to focus on in this paragraph is that it's going to lead to an increase in FDI. And why is that? Simply the reason behind that is that since the currency is depreciated, this means in terms of other currency, in terms of the prices of other currencies, the UK currency is now cheaper. So now to buy £100 worth of stock of a UK firm is now cheaper since our currency has depreciated. This, therefore, we could say will lead to an increase in FDI, since now it's cheaper for foreign firms to invest within the UK, so therefore there'll be more incentive / they'll invest more. And of course, a classic valuation, the opposite side of the spectrum here, is that a depreciated exchange rate would actually reduce the levels of FDI. Why? Because the levels of uncertainty, the levels of fluctuation within the currency would disincentivize foreign investor to invest, since they don't know what's going to happen with their investment. Maybe the currency will continue to depreciate and they'll lose out in real terms in terms of their own currency when they invest. So really good and really easy evaluation point there as well. So that's pretty much how I'd structure these 2 paragraphs here. You don't need 2 paragraphs here, but remember, be brief, just make sure you hit the marking points, get your application marks in, and that's all you need for that 8-mark question. And remember to pick up those application marks here. I'm just working out a percentage change from July 2016 to, I believe it's April 2017. I'm just working, just another starter figure to throw in to pick up those 2 application marks you have for this 8-mark question. Okay, so quickly sketch down how to write that first point. So when the exchange rate depreciates, this means imports are more expensive, thus rationing demand for them, meaning lower import expenditure. Also, exports cheaper, meaning more competitive on global markets, leading to increase in export revenue. Thus, with less import expenditure, more export revenue, it'll improve the UK's current account deficit. So, with regards to valuation here, of course, we're talking about depreciated exchange rate. We're talking about the current account. Of course, a really good one that would work here, especially if it was a larger answer question, would be the J-curve, the Marshall learning condition. I'm not going to include that, however, because remember, this is an 8-mark question. You get 2 marks for evaluation. There's no point wasting my time writing out a full substantiated point about the J-curve, the Marshall learning curve. I'm just literally going to do a really simple evaluation, talking about the time frames. I'm just talking about how it differs between it could differ between the short run and the long run. As in this graph, we're only given a limited amount of data. We have no idea in the long run what might happen. For example, the exchange rate might start to appreciate again and it might recover. So you could say this depends on the short run versus the long run, as in the long run the exchange rate could recover, meaning that the positive impacts on the UK's current account may be short-lived. And yeah, so that's how I would do that 8-mark question. If you want to do 2 paragraphs, you can do here. I'm not going to write out the FDI paragraph. I feel like I explained it fairly well. But yeah, that is an 8-mark question done.